Well, it's 7 o'clock, and again, we're grateful for all that are here with us this morning on our normal monthly third Wednesday grain and cotton marketing update. And we, as usual, we have Dr. Robinson and Dr. Welch, and this month we've got Christi Shorts, who's the regional communications director for the Cotton Board, and we will hear from her a little later. And truly grateful for all that's here, and we'll get into our program. Just want to make mention of our sponsors, the Texas Sorghum Producers Board, Texas Corn Producers Board, and the Cotton Board have all agreed and done been a part of this program and sponsored it for all the months that we've been doing it now. So with that said, again, if you have any questions, please use the chat. We will be monitoring that, and I'll turn it over to Dr. Robinson. He's with a cotton update.
All right. Let me choose the right PowerPoint here. I think I want that one and that one. All right. Hopefully you can see that screen, and we'll just get into it.
Yes, sir.
Thank you. So as of half hour ago, this is how often I have to check things to see what's going on with the markets, because they've been on a roller coaster. Well, they've been on a mountain climb. They just keep surging higher and higher. So old crop cotton futures are in the low 80s, and new crop December is pushing, 77.5 cents, which is amazing to me, but it keeps happening. And there's some fundamental reasons for it, and there's some inexplicable reasons for it. So let's just kind of point those out. So here's the fundamental reason. That far right column here is what USDA updated in their January supply and demand numbers. The two biggest questions going into the report and a little bit coming out of it remain: how large is the U.S. crop? They lowered it 1 million bales here, basically from 16 million to a little under 15 million, cutting large amounts out of their projection for Texas. There's still some question about whether the crop size is too big, even at this number, 14.95 million, because there's still a discrepancy between what USDA counts as bales classed versus what USDA NASS projects as bales of production. Last time I checked, there was a 2 million bale discrepancy. Sorry, that has shrunk to 1 million bale discrepancy. But it's a little late in the year to have 1 million bales ginned and classed. So we'll see how this works out. This could go a little smaller. So that's one issue. The other is exports are on the uptick, and the pace of exports is really high, and USDA has been bumping this number up even while they've been cutting this number. So as they do that, you might expect the bottom line of what's left over, the ending stocks number, has been shrinking a lot because they've been cutting supply, they've been increasing consumption, and ending stocks is now, it dropped from 7 million to 6 million to now to a little under 4.6 million. So fundamentally things are tightening up, and there might still be a little bit of more room to go with this number. Now, having said all that, with ending stocks at 4.6 million, that to me is not really justification for having 80, 81, 82, 83 cent futures. So there's more going on in the market to give us this price surge than just this amount of fundamental tightening. So here's another bullish looking thing that's been going on lately. This is the pattern of exports in blue. So that's 350,000 bales that week and 150,000 bales that week. You can see it fluctuating. You can see it fluctuating in opposite direction of price movements, which is the red line. What I want to direct your attention to at the end of this long rally in prices, when we get up to where we've been in the last month or so, there's something rather surprising, and that is we've had weeks like this is what I expect. I expect the price to go down and there to be a bump in export sales business. That's just normal economics. But we've had a few things that look like this. The price went up and it didn't really drop as much as I expected. The price went up here recently and we actually recovered some export sales. That is to say, in a rallying market, we're selling more. We're selling more, which that would suggest to me that, if it happens over the next few weeks and it keeps happening, then that suggests to me that there's a demand expansion going on, which, is possible if it's, we see it unfolding here. But that's a very bullish thing. That's one of the reasons USDA is bumping up the export sales projection. And it may indicate recovering demand, or it may indicate other things, but you got to get to a point where these super high prices are going to squelch demand, kind of like it did here. Here we were going up and we saw a drop off. That's what I was looking for. I was looking for it this week too, and I didn't see it. So this coming week with these high level of prices, I'm expecting to see a drop back to here. But if we don't see that, then like I say, that means that something really dramatic is happening with an expansion of demand. So I'm watching that, and I'll point everybody's watching that. The traders are watching that. The merchants are watching that to see how this demand picture is unfolding. There is spec buying underneath this rally in prices. You can see that going back to last April. Here's the increase in prices. Here's the buildup in those speculators in blue and those speculators in green. In the last week or so, the green guys actually dropped off a little bit, which that surprises me, seeing how prices went up. So I'm thinking that they're going to be back in. They probably were doing some buying at the tail end of last week, and that's going to be reflected in the next amount of data that we see from them. But these guys are behind some of this, and some of it, I'll just say, doesn't really have anything to do with agriculture at all. There's something called a commodity wave. That is to say, these speculators are just, they're throwing their money into the stock market, into anywhere they can to get a good return, and commodities is one of the things on their list of investments. And so these guys in blue are probably bumping up their allocation to cotton, and these guys in green are just following this trend. So I don't know when that'll end, frankly, but that's some of the fuel that's pushing our markets up, and it's happening in grains too, I'll point out. So let me wind up this discussion of where old crop prices are now by saying one other thing. Having 4.6 million bales of ending stocks, that tightening of ending stocks probably has the biggest impact for this coming crop situation, because it tightens up the supply going into next year. And that's going to have a big impact on what we actually end up planting and producing. This is a little chart I use to predict what cotton acres will be this coming season. Just considering grain prices, the relationship of grain prices to cotton prices is reflected in this scale down here. And right now, between what new crop corn and new crop cotton are penciling out, it would project that we would plant no more than 12 million acres, which is going to work out to be a tight level of production if it works out that way. So another thing to consider is that's very dry. Now they've had a lot of snow out there, and that's helped their moisture situation some, but it's still pretty dry, especially in the western part of the panhandle. That's going to induce some people from, let's say, Plainview down, probably to plant more cotton, because that's what they tend to do during super dry situations. And because the insurance price right now would be 77 cents. So that's going to have one effect here, but I'll point out up here, people are going to respond to high corn prices. They're going to respond to their recent bad experience growing cotton. That's the same over here in Louisiana. That's the same where all those hurricanes hit over here. So a bunch of people are going to cut back, and they're going to react over here to peanut prices and soybean prices that are on a rocket ride, and corn too. So there's going to be a lot of reduction in acres. It's going to happen over in this world, may happen over here, may happen in Oklahoma and Kansas. from what I understand, you guys may just kind of be back to normal with your cotton sorghum rotation here. But I'm expecting overall some trimming in total cotton acres, and that's going to have an impact on how we pencil out ending stocks. So because it's dry, I'm assuming that we have an above average abandonment. I'm assuming we have kind of the kind of yields that we have when a bunch of dry land fails and doesn't contribute to yield. That pencils out to a 15 million bale crop, which is not much. We're only carrying in 4.6 million bales from this old crop season. So, you know, if we export what we normally export and spend what we normally spend, that doesn't leave very much leftover cotton. We're dropping ending stocks from over 4 million bales down to something near 2, and that is tight. Statistically speaking, that would suggest that we would have futures averaging over 80 cents in the fall, which is amazing. I'm amazed that I'm saying that, but that's what my little statistical model would suggest if we wind up with this tight of an outcome. So, of course, that'll change with information as we go. The market's going to be critically watching the planting reports, starting with the cotton councils in February, USDA's at the end of March, and USDA's at the end of June. The market's going to be turning with expectation on what those reports are going to say, because they're all going to have an implication for that outcome right there, which in turn is going to influence prices fundamentally. So here we are, old crops trading in the low 80s. They could go up from there if those speculators still have room to buy. So we could be in the mid 80s with those old crop futures. And December may range from, if I had to pick a 10-cent range, I'd say 75 to 85, which again is just astounding to me, but there it is. There are things that are fueling it, but those things tend to be kind of hard to predict. I don't know when the specs are going to turn and sell, take their profits, or get scared by something. So we'll have to see. And also, again, closely watching what this price rally does to demand for our exports. I'm expecting somewhere there to be sort of an equilibrium and for this rally to be tempered, but it hasn't so far. I'd be glad to take a question right now. I'm going to have to run to my next Zoom meeting, but I appreciate the time and the opportunity to visit with you.
I didn't see anything in the chat, Dr. Robinson. So again, thank you for getting up with us this morning and giving us a little bit better news than we've been getting in the past. So things kind of looking up at the moment. So
all right,
grateful to see and hear those things are taking place.
Good deal. Thank you.
Thank you. Dr. Welch, are you ready to roll?
You bet. Appreciate that, Bobby. Let me see if I can bring up the screen that has my presentation. And if y'all can confirm that you can see that all right.
It's working. And there again, we're glad that you're with us this morning. And so take it away.
All right. Thanks again. Good to be with y'all. You're going to hear me echo some of the themes that Dr. Robinson just shared with the influences that are going on in the grain market. And really hasn't changed in many respects from the last couple of months that we've been visiting. We're going to talk about China. We're going to talk about weather. That's kind of been the driving influence in the old crop, and it's certainly setting the stage as we move forward for 2021. These are the updates that USDA made to the supply and demand balance sheet in the January WASDE. And this is for corn, and if you look at the adjustments they made tightening that supply situation, probably the most dramatic of those was going from 175.8 bushels per acre as a national average yield down to 172. That cut 325 million bushels off production. With lower carry-in stocks from the previous marketing year, we dropped supply 400 million bushels. Now that cutting the yield back to 172 and almost a 4 bushel decrease, that's a pretty significant drop. Still the fourth highest yield in U.S. history. So we're not talking about a crop failure, but it indicates how these price is so sensitive to relatively small changes in our supply situation. And then it was interesting with the higher prices that we've seen over the last, since August, been driving this the price trend higher. What did USDA on their use estimates? They lowered feed, they lowered fuel, and they even lowered exports to a degree. And so tempering that 400 million bushel drop in supply was a 250 million bushel decrease in use. And that lowered the ending stocks then, the balance of that 150 million bushels, dropped our days of use on hand from 42-day supply last month down to 39. What does that do to price? Well, that looks something like this. When we've seen our record high prices in this biofuel era, that days of use on hand at the end of the marketing year has crossed that 40-day threshold. We get below 40-day supply projected at the end of the marketing year, things are tight. Markets get nervous. And we've crossed that threshold now. We've seen futures, of course, well over $5. And now the prediction for, or the estimate for the old crop season average farm price is going to be down around $4.20 a bushel. So the question moving ahead, and we'll talk about acres, I think that's going to be the real question on the first element of that supply situation moving forward. Are we going to move to the right or the left around this 40-day threshold? It's going to get tighter, or could we get the acreage base perhaps to move us to the right again in 2021? And we're going to kind of try to address that question here in the next little bit. But that indicates we're on the tight side of life over here when we're looking at the corn stocks to use ratio. Globally, what do those numbers look like? Here are the US numbers in blue, and then we've dropped below that 40-day threshold. The world without China in the calculations is virtually the same. And these are both the tightest stocks to use levels that we've seen for the US since 2013, globally since 2012. So this is just a tight part of the world to be in. If you look at the global numbers alone and include China in that calculation, that level is coming down, yet not at relatively tight or critical levels. And that's the question. China, the numbers that are being reported indicate that their ending stocks account for some 68% of the world total. So 2/3 of the world's ending stocks of corn are held in China. And yet it's China's appetite for corn imports that is driving much of the price action and obviously the exports from the US here over the last few months. Their stocks to use ratio in China, we're looking at a 40-day supply in the US. If these numbers are accurate, the estimate for China at the end of the marketing year would be a 244-day supply of corn. That's 8 months of supply in stock at the end of the marketing year. I'm not going to say those numbers are right or wrong, but it is interesting that with such large stockpiles, the degree to which they continue to pad that supply. So is that sustainable? Are those numbers reflective of something else going on domestically in China? Time will tell. But it does seem to be some contrast between what the reported numbers show in the WASDE versus some of the export and the import activity that we've seen over the last couple of months. Meeting that export demand, it increased around the world, not just for China when it comes to imports of corn. This is what our global competitors, what their production experience has been in the last couple of years. You can see they've the strong increase over the last 10 or 12 years, increasing our export competition from around the world. However, for old crop corn, we're seeing smaller crops in Russia, a smaller crop in Ukraine, and a smaller crop in Argentina. Brazil looks like their corn crop will be larger than last year. Their exports are going up, but less export competition from these other players. And so the total picture for their ability to also meet the demand of this growing export market right now is limited in some of these areas. Brazil picking up some of the slack, but certainly much of that business coming to the US. The acreage question, I think, is going to be the primary support of the markets over the next month or so. You can see how the total acres planted to these 6 crops, corn, beans, wheat, cotton, sorghum, and rice, We've been down the last couple of years. We've had some very difficult planting conditions particularly in the northern high plains. Last year it was the Dakotas. In 2019, it was the entire Corn Belt with the extremely wet conditions they had that spring. But we're down about 8 million bushels from the 10-year average. We're 12 million acres from what would be the kind of the peak of where we've been since 1996. We could plant 250 million acres of these primary crops. And so that gives us some slack compared to last year of about 12 million acres. I think we'll see an increase for our grain markets. We're already see wheat plantings are up about 1 million acres. Dr. Robinson was just sharing that he thinks if we hold cotton about the same, that kind of takes the amount of the catching some of that, some of the gap that we've had the last couple of years. Grain sorghum, I think we can see sorghum acres up 2 million acres this year. So he raised wheat 1 million, sorghum 2 million, hold cotton the same. That leaves about 9 million acres for corn and soybeans. And with the current price ratio that we're seeing between those two, I think the strong indication are that soybeans are going to get the lion's share of that 9 million acres. That price ratio between soybeans and corn right now is about 2.6. When we see that ratio getting up to that kind of level, that's the price of soybeans divided by the price of corn. We tend to see corn and soybean acres be about the same. And if we push that out to 2.6, 2.7, we could actually see soybean acres exceed corn acres in 2021. So using the numbers that we have right now, again, we could look at soybean acres and corn acres certainly being up about the same, and perhaps a little bit more of soybeans. What would that look like then? Well, we had 91 million acres of corn last year and 83 of soybeans. If we take soybeans up 8, the model would suggest we could drop corn acres back down to 89. I think a more realistic number would be hold corn acres about the same, maybe up just a little bit, but certainly the lion's share of the gain, maybe adding 8-9 million acres of soybeans next year. So what that does, it holds corn acres about where they are. So if we were to keep corn acres relatively unchanged and we've got a tight stock situation going in, what does that shape up then for our supply and demand situation moving forward for the 2021 crop? This black line indicates the yield and the planted acre combination to keep ending stocks unchanged. Now they're tight already, but if they stay tight, what would these different combinations bring us given a use estimate of 14.6 billion bushels? And that would be keeping use next year the same as it is this year, without a change from those numbers from the January WASDE moving forward. If we were to use that use estimate, if we plant 90 million acres of corn in 2021, we would need a yield of 176 bushels per acre to keep ending stocks unchanged. You can see obviously then if we increase that planted acre to 91 to 92, now we start to get a little cushion. That's going to add to ending stocks. There'll be a little bit downward pressure on prices. We plant that 89 million acres, or we have a yield under 176. Now we start pulling that stock situation that starts going down, and that supply situation gets a little tighter and a little tighter. The yield projection for 2021, if you just had a straight line estimate based on yields going back to 1950, you would come up with a trend line yield projection of 176.7 bushels per acre. So that 176, that would be kind of baked into the estimate. That would be, seems very doable just based on long-term history. You're likely to see in some of the early season estimates that are going to come out from private firms as well as from USDA, something well over 176. Last year, the step-off yield that USDA used for the U.S. corn crop, based on their models and trend yields and long-term projections, their step-off point was 181 bushels per acre. I would be surprised if we don't see a number around that for some of our early season estimates. So you plug in that 180, and even at 90 million acres, we're adding to ending stocks. That's going to dampen perhaps some of the price escalation that we've seen. Not going to take everything away, but it might lower the flame a little bit in terms of the pressure on higher prices from here until we know more about the planting situation, the weather situation, and of course then the demand conditions moving forward in the new crop year. So 90 million acres, 176 certainly seems doable on both counts, and that would keep stocks unchanged. I think we could see acres up a little bit from that. I think the yield estimate is likely to be something just at trend or a little bit above, and that then adds moderately to that ending stock estimate, not dramatically. Grain sorghum, USDA raised the export projection from December into January from 275. They added 15 million bushels, taking us up to 290. They took 10 million bushels away from basically ethanol use. We're not going to use it for fuel. We're going to send that grain sorghum to China. That premium that we're seeing in grain sorghum relative to corn expanded nationally as of the end of October, $1 a bushel advantage sorghum versus corn. The prices are going to follow each other. There's no question about that. Grain sorghum is going to follow along the price of corn, but we do see in these strong export environments the degree to which grain sorghum can earn a strong premium. And so we've got strong exports for grain sorghum, and we have a tight stocks situation for grain sorghum. Stocks to use ratio for grain sorghum is about 8%. Days of use on hand, a 27-day supply. We're looking at around 40 for corn, 27 for grain sorghum. It's tight. So strong export demand, tight stocks, and we're seeing, of course, that premium then reflected in the cash market paid to the farmer. This would reflect that relationship between export sales, which are the red bars, and that sorghum premium. For the marketing year right now, we're just over 80 cents a bushel. We're headed for about 7 million metric tons of exports, which combined these 2 years would be up at the level of where we were in 14 and 15 and 16 with those strong export sales to China. So again, corresponding to the strong export projections, we're seeing the premium reflected in that grain sorghum market. And I think that's what's going to drive the increase in acres for 21 as we're looking at grain sorghum. This is what the price chart looked like when we met last time. The corn futures, this is December 21 futures market, had just crossed that 420 threshold since that time. Now we pushed it up over 460. If I just had to plug in my my acreage projection and the yield using something around trend line yield, I'm looking at something next fall on the corn market around 420 a bushel. And that gives us, of course, some risk premium reflected in these current prices. And so if I think that we are going to see something maybe dampening that outlook to some degree at these relatively high prices. One very simple marketing strategy. If I'm ready to add to sales in my marketing plan, if I'm going to scale up my marketing as these prices have gone up, and I'm nearing the window when I want to do that anyway. So what tool might I look at to do that? But one very simple tool is just to track the recent prices along with a 10-day moving average. That seems to work pretty well in the corn market. The price of corn on the December futures has not crossed below the 10-day moving average since the 10th of December. And so it's been riding this significant trend moving higher, and we are seeing prices lower this morning. But if this is my pricing tool at which I'm going to price the next 10% of this 2021 crop, I could do so when the price closes below the 10-day moving average. As of yesterday, that was 448.5. When I checked just as we were starting the meeting here this morning, December corn was trading at 449.5. So I'm down very near to a trigger point, which I might consider adding to my sales for the 21 marketing year. Again, it just gives you some objective tool. If you just have an outright price target, that's great. But I want to ride these prices higher as long as I can. But if there's some indication that the price is breaking, we're running out of steam for now, and these are prices that appear to be profitable, at which I can lock in a very favorable financial situation for what I know about the crop right now, then this is just one tool that you might use to go ahead and use as a signal. Go ahead and get a little pricing done and capture these markets as they move higher. Again, I think it's going to be mostly about planting right now. Of course, obviously, we need the continued strong export reports as we move to keep the old crop grain moving. But then how we're going to divvy up those acres for 2021. Then we'll be talking about weather. Then we're going to talk about foreign competition for those export markets. A lot of things to unfold. But I think certainly the questions around acres is the one that will dominate the price direction, certainly until we get through the end of February into late March. So those kind of things I'm looking for. That's all I brought for this morning. I'd be glad to take any questions or comments if we have anything right now. Otherwise, be hanging around and see if something comes up a little bit later.
Thank you, Dr. Welch. Really good information. And again, we greatly appreciate you being on this morning and giving us that update. A lot of good information and timely information that can be sure enough useful at this moment in time. So I guess I didn't see any chat or any questions. So I guess we'll move along. This morning, our special guest is Christi Short. She's the Regional Communications Manager for the Cotton Board. And we're very glad to have her here this morning. And Christi, are you ready to go?
I am. Good morning, guys. I'm going to keep my video off. They was having some low bandwidth problems earlier this morning, so I'll just keep it off while I'm sharing my screen. Hopefully you don't lose me while I'm on. But thank you guys for asking me to speak this morning. I'm excited to share a little bit about the Cotton Research and Promotion Program and what we're doing at the Cotton Board and Cotton Incorporated. I know you heard from our Director of Communications back in probably mid-fall or so. So I'll kind of try to update you on a few things we've been doing since then throughout the pandemic and some things we're looking forward to through 2021. Just as kind of a reminder for those of you that aren't as familiar with the Research and Promotion Program, we essentially have two arms of the program. The Cotton Board, which is the group that I work for, we collect that per bale assessment that's on every bale of U.S. upland cotton ginned in the United States. We also administer the program, so we kind of have oversight of Cotton Incorporated strategic plan. We work with their staff, with their board of directors. And then we get to have the fabulous job of communicating back with our program stakeholders what we're doing with their assessment dollars. So this includes a lot of producer-specific outreach, producer messaging, our famous Cotton Incorporated producer tours, and activities like that that are communicating directly with our program stakeholders. And then Cotton Incorporated is the entity of the program that actually carries out the promotion and the research of cotton. So they conduct a lot of ag research, product development and implementation, promoting cotton to consumers. So any television ads that you'd see, radio ad spots, that's coming from Cotton Incorporated. And then of course we have government from USDA over the program. So we do have to have all of our messaging and all of our information approved by USDA. Our assessments that we have coming into the Research and Promotion Program is a little bit over 50% of cotton producers. So again, that's that assessment on every bale of upland cotton that's ginned and harvested in the United States. And then we have about a 47% of our total assessments comes from importers. This is the group that actually not a lot of people realize we collect an assessment on. So goods that are imported back into the United States, there is an assessment on the cotton content of those goods. So you'll see on the Cotton Board, we also have a good group of board members who are importers. So people that work at mills, manufacturers, retails, brands, kind of, and it's a nice partnership for our producers. It kind of gives you a friend in the Research and Promotion Program to help us understand trends and buying power and maybe what we need to focus on in coming years based on what they're seeing in their particular business. Our 2021 budget that Cotton Incorporated will be operating on this year is right at $80 million. So this is actually a decrease from 2020, well, a decrease from the last couple years as well. Of course, it's no surprise to anybody on this call that 2020 was a very interesting year, a difficult year, some may even say. So it's not a surprise that we had a decrease in our overall budget for Cotton Incorporated, but we were really excited and proud of the fact that we were able to keep such a strong budget going forward. Our compliance department has a fabulous compliance and collection rate. Our financial staff at Cotton Incorporated and Cotton Board has been very successful at managing their funds appropriately and saving for some of these tough years to kind of carry us through. So that $80 million is a decrease, but we're still really excited about the opportunity that we have with that $80 million. So again, at the Cotton Board, we kind of focus on our producer outreach and education. We've been hosting a bunch of Zoom meetings this year. I know like a bunch of different groups are. We continue our regular social media outreach. We have monthly articles in Cotton Farming and Cotton Grower magazines to specifically address, regional trends, regional research, things that are of interest to producers out there. I'm going to show you this graphic just kind of for the sake of exciting update we have at the Cotton Board. So I'm our regional communications manager for you guys in South Texas that also cover various other areas of the state through the far west. But I wanted to point out we have just hired a new regional communications manager over in the Mid-South, so covering those states right through the Delta, Tennessee, Missouri, Mississippi, Arkansas, and Louisiana. This is the first time that our regional communications team has been fully staffed across the Cotton Belt in quite some time. So we're really excited to have, all 4 communications managers out there reaching producers and visiting with them. So we're really excited to have Grant on board. And that's something that, is a positive thing that's come out of 2020 and 2021. So we're looking forward to having Grant with us on our team. We are tentatively planning and looking forward to having 2 Cotton Incorporated tours in 2021, maybe 3. We unfortunately had to cancel our planned tours in 2020 from March, June, and September. We were not optimistic about hosting tours in the first quarter of this year, but we're hoping maybe things will start kind of turning around by summer or fall. So we're going to set some dates for our producer tours and hopefully we'll get to have them. If not, we'll definitely reschedule them to another month that's more appropriate for people to travel across the country. If you have never been on one of our Cotton Incorporated producer tours or you've never heard of this program, please reach out to me. This is kind of our shining star of our producer outreach. We'll take producers from all across the Cotton Belt, fly them into the Cotton Incorporated World Headquarters. They're in Cary, North Carolina, and spend about 2.5 days meeting with senior staff at Cotton Incorporated, hearing some program initiatives, touring their research facilities, and getting to ask some questions, that might be relevant to these producers or things that they're interested in doing. And then we'll also get a tour, a commercial spinning facility just north of Cary in North Carolina, and then travel back home. So it's a really good opportunity to see your assessment dollars at work. Cotton Incorporated is producer funded, so it's your research facility that we want you to see and understand. So we do have a women's tour scheduled for June and then a multi-region tour scheduled for September. So we're crossing our fingers that maybe we'll get to have these, but if not, stay tuned for some other dates later in 2021 and even ones in 2022. We started a Cotton and Coffee sessions back in 2020 once we realized that we all might be zooming for quite some time. They were a lot of fun. So in 2020, and what we're going to plan on doing in 2021 is once a month have a short 30 to 45 minute Zoom call in the morning, and we're going to hear from a different department at Cotton Incorporated or even a different cotton industry partner about some things that they're doing in their specific area. So last year we heard from our sustainability group, the U.S. Cotton Trust Protocol, some different ag research projects that were kind of popular and up and coming at the time. We've heard from our consumer marketing. So we actually just had a cotton and coffee yesterday where we heard from the team that works on our cottonseed oil marketing and research. So that was really interesting to hear some of the trends that they're seeing in that area. And we'll have another one scheduled on February 16th, where we're going to hear from some corporate strategy and communications, the group that kind of follows consumer trends, buying powers, and what they're looking at doing going forward. I'd love to get you registered for our cotton and coffee sessions. Again, it's a brief 30 to 45-minute call in the morning where we hear some information, time for question and answer. And we are going to have one every month throughout 2020. So look forward to seeing you guys on that with some different topics. I'm just going to give you kind of a brief Cotton Incorporated update, what some of the things they're working on the research and marketing front. As it's no surprise to you guys, there's been a lot of changes, ups and downs, with the stock market, with cotton prices, with marketing, over the last 10, 15, even 20 years. One thing that we were really excited about, I'd say over about the last 2 years, cotton's market share had really kind of stabilized in almost every apparel category. We were really starting to kind of fight the good fight, if you will, against man-made fibers and different cotton apparel categories. So we were really on a fabulous uphill trend. And then, of course, no surprise to anybody else, we're really suffering from the economic fallout of the pandemic, like many other clothing, food, different kind of categories like that. So it's been really interesting to kind of shift and, plan for 2021, maybe what the other side, the new normal, and what it's going to be then. We have been really excited during 2020 specifically, when we really need to kind of shoot out a COVID response from Cotton Incorporated. A lot of really neat things came out during that time. Cotton Incorporated has really been leading the cotton industry efforts to rebuild and retool the downstream supply chain for all different types of cotton products. We really have to regain that consumer demand and strengthen producer prices. So that, revitalizing that supply chain really is quite critical. Cotton Incorporated has really adjusted quickly during the start of the COVID pandemic last year. Their corporate consumer marketing area sent out a lot of consumer insight surveys. They sent out some surveys to different countries all across the US, different buying groups, to kind of learn about, what their buying trends are now during the pandemic, and maybe what they see their buying trends being after the pandemic and the new normal. So that's really been able to provide some insight to different groups, throughout some months of uncertainty. They've really kind of led the way, making some non-wovens PPE connections, even making some connections with mills and manufacturers overseas for, making masks quickly, hospital gowns quickly, some of those woven materials, but also non-wovens things, bandages, Q-tips, different things that you wouldn't think about. But when that supply chain was really disrupted in the height of the pandemic, Cotton Incorporated was really able to shift and be a tool to these overseas mills and merchants, and even ones domestically in the US, to kind of change maybe where they're sourcing or buying things from to meet the needs, specifically of the medical industry and those healthcare workers. We also had a huge change in our consumer marketing. TV commercials were in the process of being filmed in the spring of 2020, and then, had to stop, shift, and create different types of commercials that really focused on, where we all were as consumers, at home, staying comfortable with our families, and creating a message then that, cotton would be the fabric of choice in your clothes to stay safe and stay comfortable with everybody while they're staying at home. The Cotton Incorporated Ag Research Department really in the summer and the fall of 2020 kind of really got out, hit the road, did some safe, socially distanced visits with their ag research cooperators, with producers, to kind of check the status of some of these research projects. While many of us, went home to work in our offices or conducted meetings by Zoom, the research was still ongoing. So we were really excited that we were able to continue that effort on behalf of our cotton producers. The Ag Research Department typically funds about 400 projects every year, and these are going to be belt-wide related, state-specific, region-specific. So, our farmers were still out there farming, and our research project still needed to go on. So that was really exciting. We were able to continue that effort throughout 2020. We also have this producer-facing website I wanted to mention, Cotton Cultivated. It's kind of gotten a facelift, I guess, probably over the last year or two, but this is a fabulous resource for you guys and for producers. It has some abbreviated research reports. If you wanted to kind of see some weed management trends in your area, this is the site to look at some of that research and resources that Cotton Incorporated has funded over the last few years. This site also houses a weekly weather update that we have, that you can look at some different weather patterns that are happening across the whole country and actually across the whole globe if there's something kind of large and seismic coming through the pipelines. But Cotton Cultivated will be a fabulous resource for you guys to use. And I wanted to mention it here because it's really been kind of catered and customized to be a little bit more user friendly recently. And it's a fabulous site to use. We also are joining the effort with National Cotton Council to promote the U.S. Cotton Trust Protocol with cotton growers. So if you haven't heard of the Trust Protocol before, I'd love to visit with you a little bit more about this. But, we're really urging all producers to sign up. It's a brief questionnaire. I think they say it takes about 45 minutes to complete the questionnaire. And then post-harvest, there'll be some like field to market data tools that you go in and complete. And this will be something that needs to be updated yearly, but it really is going to help U.S. cotton continue to hold their market share on the global scale. So it's really important that we get producers enrolled in the Trust Protocol, and I'd be happy to answer any questions or help any growers that need it to get enrolled in this. One of the kind of last things I'll mention, research specific wise, is we've really gotten a lot of traction over this microplastic and microfiber research over about the last 2 years. But this is something that's really gained some momentum. When you launder clothing or bed sheets or textiles, whatever they might be, synthetic and natural fibers shed from those clothings in the launder system. So whether it's cotton or polyester or rayon or wool, a little bit of fibers shed off into the water system with that. But then what happens after that? Or what happens in oceans and streams and lakes with garbage that's maybe dumped into the water system. So there's been a lot of research behind this on, okay, do those synthetic fibers, do those synthetic materials, and do those natural fibers, do they ever biodegrade completely? Or what happens to the aquatic life when we're kind of dumping all these microfibers into those water systems? So no surprise to us, hopefully, cotton performs beautifully in this degradation study in biodegrading in the water system, whereas of course synthetic fibers do not degrade much, if at all, over a certain amount of time. So this is something that's really gaining traction in the textile and the fashion industry as consumers are becoming a little bit more complete cycle minded. So I buy a piece of clothing, but then what happens when I'm done with it and I discard with it? What's its life cycle like after that? So this is a really exciting piece that's really gaining traction, and our sustainability department at Cotton Incorporated is really kind of leading the efforts on getting these research studies out there and getting that message to those textiles and fashion industries, to answer their questions of what happens to these different fibers over time when they get dumped into the water system. And then, of course, even throughout the pandemic, we've been working on getting cotton into products at retail. There's some adoptions here on the screen that I've decided to point out that have been some new adoptions at the marketplace. So hopefully you recognize some of these companies: Vera Bradley, Vans, Callaway's, Walmart. Their job is really to take the different technologies that we can put on cotton fabrics and implement them into products that these companies are wanting to sell. Little girls' leggings, you'll see here in this adoption from Walmart. Several years ago, some companies, were about to kind of shift away from using cotton in leggings because they just didn't appear to be as durable. Little kids running around, crawling around on floors. So our product development team said, well, hold on, let's, see what we can do, what technology that we can implement into this cotton. So they came out with tough cotton technology, which makes those pants super abrasive resistant, just gives them a little more power, in the pants, so they aren't tearing down quite as quickly. And we've seen that particular adoption very successful at a bunch of retailers and little girls' leggings and pants. And that's been really exciting. The Callaway golf polo, a cotton golf polo that helps wick moisture away from the body. So a sweat hiding technology. That's just a brief overview of some of the different technologies we've been using throughout this last several years to really get cotton in products where maybe they wouldn't have been normally. There aren't very many cotton golf polo shirts out there. So that was a really exciting market to get into. And then, of course, our consumer marketing. I mentioned at the beginning that they really had to shift some of their messaging at the start of the pandemic, but definitely didn't stop their messaging. We still have rolled out television commercials that were relevant to the consumers watching them, digital, social media, public relations. I do want to mention one partnership that we had over the holiday season, which was really exciting. The first time we had a partnership of this magnitude. It was with Amazon, and it was the holiday edition Style House. So showcasing different clothing materials that were, cotton rich content that you should look at when you're doing your holiday shopping. You see a picture of a family pajamas here on the screen, but different, evening attire, holiday attire, Christmas pajamas, different types of things. So it was really exciting to have that partnership, especially with the brand of the magnitude of Amazon, with how much online shopping we all were doing during the pandemic. So that was really exciting. We will continue to do these types of partnerships, public relations, really utilize social media influencers throughout 2021, and I expect throughout 2022. So we've really been able to kind of leverage some fabulous partnerships to help on the consumer marketing side to kind of get the great message of cotton out there, why it's durable, why it's comfortable, and why it should be the fabric of choice in your clothing and home textiles. They have also come out with we've talked about this for about a year and a half now, but these classroom teaching kits are available free of charge on the Cotton Incorporated website. So they worked with Young Minds Inspired to create this STEM-based teaching kit specifically directed at children with hands-on classroom lessons and activities. I think these are specifically gauged for grades about 4 through 6. Of course, there's elements in this that you can pull out to use for children younger and older than that, but really helping us get cotton and the science of cotton into the classroom. So again, these kits are free of charge. You can download them off the website, print the fact sheets, print the activity sheets. There's a poster you can print in the classroom. We're hoping to partner with Young Minds Inspired again to create some different age groups and some different levels of curriculum within this over the next year or two. But this is something that came directly from input from our board members, what things are that they'd like to see Cotton Incorporated and the Cotton Board work on. So it's been a very successful STEM. We've had a lot of teachers utilize this curriculum over the last year, and we're excited to see what the future holds for it. And with that, I will turn it back over to you guys. I'd be happy to answer any questions that you might have, or my email is up here, cshort@cottonboard.org. Love to answer any questions that anybody might have in the future. So thank you guys again for having me this morning.
Christi, it was a pleasure to have you with us this morning, and a lot of good information and about cotton and how it's been marketed and the research. And we greatly appreciate you getting up with us this morning and filling us in what's happening there at the Cotton Board. So also on with us this morning is Matt Boucher. He's the County Extension Agent in Victoria County, and going to give him just a second to talk about an upcoming program he has that people may be interested in.
Well, I know everybody out there's got a private or non-commercial or commercial pesticide applicators licenses looking for hours. A lot of those licenses expire at the end of February. So we put together a virtual CEU program, Victoria CEU Virtual Seminar. It's set for Thursday, January the 28th. It'll start at 8 o'clock in the morning. And you can register for that event if you go to Eventbrite and search for Victoria CEU Virtual Seminar. It'll come up. All registration will be handled online. We will have up to 6 hours of credit that day. 3 hours of laws and regs, and the rest will be a mixture of everything else. But we will focus on the picolinic acid training, which is the Envora training, the Bayer product that is going to be utilized for weed sash and other brush control. It's a good product that they have coming up, but you have to have training for it. And also the farmers that use auxin-based herbicides will need the auxin training. We'll have that at the end. So if you're interested, go to Eventbrite and search for Victoria CE Virtual Seminar and get registered online. Look forward to seeing you there. Thank you, Bob.
Thank you, Matt. And as we close out the update this morning, I'm trying to share. Oh, here, never mind. Did the successful succession planning workshop come up?
Yes.
Yes, it did.
Okay, just wanted to make a plug for this program. Really neat program. Corn producers have been advocating this program, and it's going to be one will be in February 10th in El Campo, and the other one will be February 11th at Robstown. So if you're interested in a free estate planning workshop put on by being done by Tiffany Lashmid, I think that it will be worth your time and effort to participate in this. So I just wanted to put this up, and if anybody needs any more information about this program, feel free to call the San Patricio County Extension Office at 361-587-3400. So if there's no other questions or comments, well, I believe we'll end this session.
Thank you, Bob. Thanks, everybody.
Thank you,
Thank y'all
everyone,
very
for
much.
being on this morning, and feel free to give us a call if you need us. Have a good day.
Have a good day. Thank you again.
Thank you much. Good to be with y'all. Take care.
Yes, sir. Thank you.